What is going on, everybody, and welcome to another weekly update. And in this video, what I'd like to provide you is events, earnings, technicals to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day in the week ahead. So let's get right into this. And something that I need to be a lot more better at is popping this up before we even get started to kind of give you an idea of the upcoming events. We've had a very historical past couple weeks, just not last week, but the week before. We had Powell come in with a 75-point basis move. Originally thought we were only coming in with a 50-point basis move, but things have changed. We had the ECB come out and start raising rates, which they haven't done in a very long time. Then you had core CPI following that show that we hadn't reached peak inflation. Now, being said, we are just getting into the summer months, and we know that gas oil prices will continue to skyrocket throughout the summer months. This is just a normal cycle, but considering what is currently going on in the world, oil prices are already through the roof. Now, this past week, what is really interesting is that we had Powell in front of the Senate and the House. So we got essentially more detail as to the Fed tools and what rate raises are ultimately doing uh, going forward. That understanding that the rate raises are essentially slowing down growth. The more rate increases that we get will potentially scare off companies from hiring, pay cuts, layoffs, and understanding that this could potentially raise the concern of recession again. And again, this can be really troublesome, but as of right now, uh, the market is very short term focused. Right now, what matters is we had a bank stress test on Thursday. And even considering that the banks lost billions of dollars on worst case scenario on the stress test, they still made out. They still have tons of money to make it through, considering that a lot of different things were set up over the pandemic to kind of help the banks out quite a bit. So, being said, the banks passed successfully. Now, also being said, uh, we are coming into the end of Q2. We are getting into earnings mode. Yes, the banks are going to start having earnings here just around the corner. And with that being said, we're going to push. I think, in my opinion, my new catalyst, especially with the bank stress test, and understanding that short term we are set up for a pretty strong little rally coming up. Again, no really bad news is good news at this point. Hopium is a real thing in the markets, considering that there's been so much bad news. That we are looking pretty solid going into this rotation for a rally of earnings. Now, you have to understand these rallies of earnings. The last one we had, I think, was like 8 or 9 days in a row, straight just pushing. And then at that point, we corrected and we got right back into Fed mode, essentially being very defensive and selling off to the levels that are discussed by Fed members. And something I've essentially kind of my thesis through this whole thing has kind of been whatever point basis that the Fed members are mentioning, or typically where the market will float around, especially getting closer to that meeting. And considering that essentially Powell has pulled all stops at this point, again, understanding that the Fed tools are again going to hinder growth. That the true root of the problem is oil, and oil affects everything. We're still very much entwined with oil. Even though we've been pushing hard for EVs, it's still going to be a long time before we are not. This is why essentially the presidency currently right now, the administration has been trying to push EVs even more and more, offering more credit as well for purchasing an EV. even with everything being considered. But also that being said, the Fed can only focus on one thing, whether that's either inflation or employment. And right now, it's all about inflation. So, with all that being said, I think again we are getting into earnings mode until the next Fed meeting. Um, so essentially, that is what this is. Again, end of the month, we end of Q2, and then we'll start rolling into a new cycle of earnings. The biggest event this week, I think, to be watching is Thursday. You got core PCE inflation at 8:30 p.m. Eastern Standard Time. That's ultimately what's going to matter. We want to these inflation gauges. They kind of wore off. They weren't. They didn't have as much weight going into the last Fed meeting because we thought we hit peak inflation, and then again when we started getting everything with the core CPI, realizing we didn't hit peak inflation, these numbers are going to start holding a little bit more weight again. So that's something we have to keep in mind. And again, any kind of hopium is going to drive this market up. Upcoming earnings, I'm not really watching anything. I do believe there's some earnings going on to finish out the last Q earnings, but again, nothing that we are watching until we get closer to the 15th of July when banks kick off again. Now, being said, watch this. These are some of the point basis moves. Again, you can get these off of options and what the market's trying to price in. And right now, we're trying to gauge the industries. I'm not picking anything in particular. I think mostly for me, I'll be watching index, especially if there's general overall strength in a rally. Index is always great to play for that. Techs can be a little bit more difficult as if there's any kind of inflation concerns or rate raises, tech can turn pretty quick. So nonetheless, I think ultimately you're getting into bank earnings. So banks could have a huge week this week. They've been holding critical levels. And I think we started getting Goldman Sachs started really pushing JPM. There are a lot of them are at critical levels, and we'll see kind of looking at these that they are ready to start really pushing up. Now, big thing to watch is where we land. It's something I've been talking about essentially almost every day since the beginning of the year, is that where we land is really going to matter. Now, something I've also talked about is every time you have a major break, you'll get a retest and a rejection. Coming into Friday, we had a nice push up. We haven't rejected, so I'm really watching this 38.84 mark. If we open below this, I think we could potentially sell back down. And I think we might just hover around the 75-point basis move, even a 100-point basis move if we open below that. Now, if we open above that, I think we're going to get a major push. People have been talking about the 75-point basis move is essentially the biggest jump we're going to have. And now that's a lot of discussion about that. If that's the case, we could be potentially trying to make our way back to the 50-point basis move. So this week could potentially be really big. Especially when the banks are concerned, the financials. We might get a nice little push up to the 41 mark this week. Again, it depends if we can hold this critical level of 388. 3,888. If we can hold that level, I think we can start pushing up because of that. Again, there's been a lot of really good strength. And again, I think we're going to start getting an earnings mode and potentially start heading up and float around the 50-point basis move going into the next meeting, unless something else comes up that is really dramatically different. Again, it has to be some other catalyst, but things are looking very strong. And I think earnings mode is going to take over. It could potentially get a massive rip to the upside. So again, really want to watch and see how this does. We'll look at Bitcoin really quick. Bitcoin has been holding very well for the most part and starting to make its way back up. Again, we haven't had a real true retest. This essentially that 2,500, that first break and retest, we haven't gotten that yet. So we're kind of looking at that at Bitcoin, really watching that key level at 25K and see if we get rejected hard and potentially where we land. If we can make a higher low, could potentially start heading back up. But again, overall market sentiment is down. We're making lower highs and lower lows. So that's one thing you got to watch here. We reject here. Yeah, it's going to be a hard rejection, but are we going to hold a higher low and then start attempting to try to break back up? And again, I know a lot of people are fearing essentially that winter cycle in crypto. Are we at a different point, right? I think we're at a different point with crypto where we won't flush all the way back down the 5K. I mean, anything is possible. This is why I say you can't fall in love. Anything is possible. And the sentiment has been changing a lot, especially depending on what the Fed is doing. It's not normally driven so much, but we are living through a very historical time, so that it does have a lot of weight. And the longer you're in this game, you realize that the market sentiment changes. Things have different weight, just depending on what currently is going on in the world and the economy, and in what people are looking at, what the market makers are looking at. So that's Bitcoin going in. Really want to see if we can try to make a comeback here and start heading back up. Again, there's a lot of key components that are swapping out payment systems and everything for crypto. So just keep that in mind. And Tesla, the first one being tech. Tech has been, again, really hard. It's been really struggling lately. But if you could tell, I mean, even Tesla, right? Even coming into earnings, it had its pre-earnings run. It had quite a few days of just pure running. Now, this is kind of what I'm looking at. I'm kind of looking to see if we can break the 769, and I think we could make another massive run back up to the 1100 mark again. I think is where Tesla could potentially go. Again, they are trying to vote on a 3-to-1 stock split on this as well for recession proofing purposes. But this is consolidating. Again, it has a big range in this consolidation, essentially from that 625 up to the 773. So we're going to see if we can break this. If we can break that 773, I think, again, we can start hitting back up. A lot of resistance. You got to be mindful of that. But Tesla is definitely one that can start breaking resistance levels very quickly, especially if you start getting in earnings mode. And they've done really well. A lot of the data with Tesla is still very good. So that's something to keep in mind. Why to the upside, it's a strong potential pick for me for the upside when it comes to tech. Now, BA is the other one. I don't typically talk about BA, but it's a value. I think it's important to do the different industries going in. BA's had some really good news making this move here, and now potentially pushing up. A lot of things had a lot of good news. So if we can break essentially above that 145 mark, we could start again gaining a lot of momentum up to the 173 mark. Potentially this week. So really kind of watching BA. Again, if we start getting a strong rotation in tech and BA banks, things are really going to start looking good and get a nice rally. We want to get some sort of nice buffer in between here and next Fed meeting. Again, if the next Fed meeting comes in at 50 or lower, that will definitely be a good sign that we could be pulling ourselves out of recession. Or avoid a recession. But even Powell was mentioning the fact that it could potentially happen. And especially with everything being so strong, a lot of data we got on Friday as well was very strong, showing growth. And that being said, the concern is that the Fed might be like, okay, well, the market is doing well, so we're going to continue to keep dropping big rate raises till we get inflation under control. And again, only thing that's going to do is deter companies from hiring people. It's going to push in such a deflation and potentially stagflation, and that can be even more concerning when it comes to growth. So that's what we are watching, because we need to continue to grow or we go into recession. So we will see where we go from here. But BA is quite interesting going forward. JPM, like I said, GS did very well, but JPM, massive candle. We wanted to hold above the 118 mark. If we can open above this again on Monday, again, financials, if they start gaining steam, we have to also remember we just made a lower low here. So this just could be potentially a higher high here. We may only get up to 120. Maybe we can push up to the 125 mark. Again, earnings coming up. We're going to start getting into that earnings mode. I think it help us pull us out of this. Again, we don't want panic to set in. We get panic. We get a 100-point basis move moving forward. We're going to see those lower lows on the SPX. And then if we break those critical levels, you're going to start hitting panic mode at that time, and things are just really going to start selling off. So JPM, we're going to see how this does. Financials coming in this week. Again, I don't really play a lot of financials, but this week could be very pivotal with financials, and I get some really monster moves. Now, GS isn't something I I brought up on the watch list, but it did make this a massive move. So kind of really watching that 302 mark. If we can hold that coming into the week, this thing could potentially keep on running. So Goldman Sachs might be one I actually do watch. Again, I don't really watch, but you got some levels here at the 310 mark, at the 316 mark. And again, if the market really wants to start ripping, these are some really critical levels. These things could really start doing some major damage because you do have this massive consolidation going on with the financials. And you have some breakouts, and so that's really good to see moving forward. That is pretty much what I got. I didn't want to make this video too long. Again, it really depends on how we open. And again, there's a lot of strength. There was some bad news out there. But I think this is all short-term relief. There's hopium in the market that we could potentially avoid a recession, but it also doesn't help that Powell's going to keep. If Powell continues to raise his rates, he's gonna drive down companies from wanting to hire in cuts in whatever the companies need to do to essentially combat inflation or combat what interest rates are doing. So that's something you really have to be careful of. We don't want to impact growth. We want to keep growing. Again, that's how the economy keeps moving. So we have to pay attention to that. But with that being said, if you made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.